Thank you very much, Mr. Mothar, for your very exciting anchoring. Assalamu alaikum and good afternoon to everyone. During COVID-19 pandemic, we are hearing many webinar, virtual classes, web conferences. So one of my friends told me yesterday, I'm so tired to hear lots of webinar. But today, we assure you, you will experience a very good and very pleasant event with the presence of global standard speakers like Mr. William Scott. He is very experienced and he has lots of experience in different dimension. He worked with HSBC and other banks and financial institutions earlier, and he started his career from US Senate is early age. So I think in addition to Mr. Scott, there are other speakers from our central bank, from BFIU, and from Dhaka Bank. So I think today our listeners, our audience will have a very joyful and very attractive webinar. So thank you, Mr. Mothar, again for your question. Actually, I understood that your question has three parts. Number one, the landscape or background to formulate trade-based monitoring guideline in Bangladesh. And number two, the modalities that have been experienced to develop the trade-based prevention of trade-based guideline in Bangladesh. And number three, the countermeasures to guard, to arrest money laundering during the COVID-19 pandemic situation that have been suggested by different policy setting body in the world. So you rightly said that Bangladesh Financial Intelligence Unit, BFIU, has launched a new regulation, new policy guideline in the name of Guideline for Prevention of Trade-Based Money Laundering. And in the world, very few countries, they have introduced separate independent guideline for trade-based money laundering, for TBML. So Bangladesh is one of them. The Financial Conduct Authorities, United Kingdom, the Hong Kong Monetary Authority, HKMA, Monetary Authority Singapore, MAS, they have launched such kind of guidelines. So we have the pleasure to inform you all that Bangladesh is also pioneer to launch, to introduce, to enact the money laundering regulation in this subcontinent. To become a pioneer, to become a forerunner in money laundering regime, one of the major indicators is the time. When, at what time, the country has introduced the money laundering regulation. In our subcontinent, there are 7 countries, If you see when the Anti-Money Laundering Act have been launched in this country, Bangladesh, April 2002, India, July 2002, then Nepal, then Sri Lanka 2006, then Nepal 2008, then Pakistan 2010, and then Maldives 2014, and then Bhutan 2018. So we are ahead of subcontinental country in this region, but we have to develop many things. Because, Bangladesh is one of the fastest growing economy in the world. And Bangladesh is going to become a first line economy in the world by 2041, the developed country by 2041. The IMF said, considering the last 10 years consecutive GDP growth rate, Bangladesh is the highest in GDP growth rate. At presently, we're passing 8%. And many international banks headquartered in USA, UK, India, GCC, Europe, they established their offices, their branches, their subsidiaries, their rep offices in Dhaka. And many others are planning to set up their office in Bangladesh. And most importantly, the export-oriented industry is growing so faster. You know, the ready-made garments industry, the pharmaceuticals, the agro industry are increasing in trade. And very importantly, recently, BPO, you know, business process outsourcing. BPO is increasing faster due to lower administrative cost, due to soft skill, due to availability of manpower. Bangladesh is going forward with this industry. It sounds that we have to undertake huge economic and trade activities in the coming years. And you know, more economic activities, more trade activities, that means more transaction. More transactions mean more money laundering and transferring risk and vulnerabilities. So to arrest, to guard that potential, that possible money laundering and terrorist financing risk, we have to prepare ourselves. We have to develop, we have to redesign our entire MLCT regime. So that is why in our country, in Bangladesh Bank, BFIO especially, introduced such guideline for prevention of trade-based money laundering. I thanks to Bangladesh Bank, especially our honorable governors and head of BFIO for their kind initiative, for kind effort. Now I am going to focus your second point. That is the modalities that have been experienced to formulate this guideline. You know, trade-based money laundering is varied, is different in different countries, in nature, in forms, in purpose. So we focused, as a member of this committee, to prepare this guideline. We focused the Bangladesh content to prepare this guideline. And if we divide the entire guideline into 3 parts, you'll see the first part is the background for trade-based money laundering in Bangladesh. And second part is the risk-based framework and control mechanism. And third part is possible indicative red flags, alerts with illustration. So the main and major part of this guideline is control mechanism. How banks can take holistic approach to guard, to arrest trade-based money laundering. So this is the main part of this guideline. And there are 4 steps, 4 levels actually, we told, 4 levels. Number 1, we call infrastructure level. And number 2, customer level. And number 3, and number 4, the enterprise or institute level. Firstly, the infrastructure level is very important. Without having adequate infrastructure set up, you cannot develop, you cannot guard, arrest trade-based money laundering. So in this segment, we suggest the banks to have at least 5 essential elements, like sanction scheme solution, transaction monitoring solutions, screening, that means price verification solutions, building own database, bezel tracking system. Secondly, the customer level risk assessment and mitigation. You know, all the customer of a bank cannot carry cannot pose a similar or same risk. Depending on their exposure, profile, and transaction, depending on their activities, the risk may be divided into three categories: high risk, medium risk, and low risk. Say, for example, Islamic Bank Bangladesh Limited is the largest commercial bank here in Bangladesh. We have 13 million customer base clientele. We have very robust risk-based metrics framework, and we found that the high-risk customer is below 2%. And considering all four types of risk components like geography, like customer, channel, and production services, a new sample risk-based framework model have been designed in this guideline. Thirdly, transactions. Transaction part is very important because in this segment, actually, the trade-based monitoring is take place. So we, in this guideline, there provision the 3-level transaction profile, like level 1, level 2, and level 3. All the, depending on the risk, all the trade will be disaggregated in level 1. If he or she is not able to disaggregate, she will escalate it to level 2. And if the level 2 is not able to disaggregate within his capacity or her capacity, then he will escalate to the level 3. And all the rules and responsibilities of levels and escalation policy and disaggregation system have been accommodated in this segment. And last one is very important. This is we call enterprise level or entity level risk mitigation system. It's very important to engage the senior management. That we, in this guideline, there are proposition 4 items. Number 1, they review the policies, and number 2, fine-tuning the system. So if you have the automated scaling solution, you have to fine-tune in every interval. And price checking mechanism fine-tune, and take into account the gap that you already have from annual review. So in addition to these 4 segments, major profiles, actually there are lots of examples, scenarios, red flags that have been accommodated in this guideline. And now I'm going to focus, and lastly, I'm going to focus your last part of the question. That is the countermeasures for illicit financing during COVID-19 situation. You know, criminals, the offenders, the criminals are exploiting vulnerabilities opened by the COVID-19 lockdown, which encouraging the risk of cyber attacks, money laundering, and trade financing. We have seen that some regulatory authorities and policy setting bodies in the world have already chalked out the possible and potential risks that would be occurred during the COVID-19 situation, pandemic. And they have also suggested some countermeasures, some solutions there against. And we found that 5 publication is very important. There is FATF and Office of the Control of Currency, United States, and then Hong Kong Monetary Authority, and Banks for International Settlement, BIS, and New York State Department of Financial Services. So these 5 publications is very important for us to address the possible risk and countermeasures that exist during the COVID-19 situation, pandemic. FATF told his policy paper that there are 2 major risks during COVID-19 situation. It's a very important point. The 2 major risks during COVID-19 situation for money laundering especially. Number 1, increased misuse of online financial transactions services because it carry additional risk to move and to conceal the illicit fund and illicit source. And secondly, the very important risk for during the COVID, that is possible corruption connected with the governmental stimulus funds or international financial assistance. So these are the two major risks during this COVID-19 situation, and why the banks are posing additional risk during this pandemic. Three reasons. Number one, the flexibility built into the annual safety risk-based framework. Number two, digital customer onboarding. And number three, simplified due diligence process. Actually, the launderer, the offenders, they are taking this facility because this is the risk for me, but this is the facility for opportunity for the money launderer. So FATF has suggested us to take 5 measures to tackle, to arrest the money laundering during this COVID-19 situation. Number one, banks and financial institutions should be very careful, remain vigilant, very vigilant to current money laundering risk while using the flexibility into the FATF's risk-based approach. And number two, banks will be very careful implementing a responsible digital customer onboarding system, because now banks are preferred to provide the services towards their customer digitally. So this is a very risky for the banks because we can see the customer. The physical interaction of the customer are not happen here. And third one, working very closely with the financial institutions, the regulators, so that and the sharing the information, the relevant information to the regulators. Fourth one, so issuing the public notice from the regulators to the financial institutions so that they can aware, the people can aware about the possible threats of money laundering during the COVID-19 situation. And last one, enhancing the training and awareness among the employees so that they can aware what are the potential risks that would be occur during this pandemic situation. So this is the answer from my side and the question of Mr. Mukhtar Hussain. So thank you very much. Thanks a lot.